Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in just a few minutes in your trading decisions. Google delivers on earnings. AMD, Eli Lilly, maybe not so much. A lot of generally constructive patterns out there in market, though, as we head into the heart of this very, very, very busy stretch coming up, Matt. What do you see from a technical perspective?
Yeah, not a lot of significant changes here as we navigate midweek here on the technical side of the equation. Still looking at the exact same patterns across the board when we're talking about the markets. S&P still hovering here in consolidation, really working that support level against that 20-period moving average right now, but still waiting on a catalyst to break it out of its slumber. That's not the entire marketplace. Obviously, during earnings season, it's going to be a sector conversation as much as it is an overall market conversation. I'm thinking about the comms chart here today, but at the end of the day, when you're looking at the S&P 500 chart, just same type of consolidation we're seeing. When you come over to the Qs, just still hovering right underneath that $500 breakout. You see it's seen it, tested it all week long from last Friday to yesterday till today, still hovering right there against that $500 breakout. Qs looks really good going into a potential breakout. AMD's news did not help that. But like I talked about, earlier this week, Mark, I didn't feel AMD was going to be a market conversation, more of an individual and a space and an AI conversation. But Q still looked good against that $500 breakout. IWM trying its choppy best to get back up into formation as it did confirm a bullish retracement earlier this week. And just a note on the diamonds here, the Dow Jones, when you have that deeper retracement, talked about it yesterday and Tackle today, talked about it extensively in the Traders Lounge for the pro members of Tackle Trading. So come over to Tackle, become a free trial member of a pro, and you can get some more detail from the actual educational side of the equation. But we talked about this developing pattern on the diamonds, and it's starting to consolidate really well underneath those shorter duration moving averages, the 9 and the 20. You want to see that consolidation to bring down those moving averages so that when they break back up above, you have a little bit of a cleaner environment. And the diamonds are participating in what we at Tackle Trading call a king's bed pattern, following a little bit of a deeper retracement. And so the patterns out there in the market are very similar to the patterns we started the market with this week. Haven't seen those catalysts as of yet, or I should say the combination of catalysts this week to really kind of drive the market to change the overall landscape from where we were yesterday or the day before.
It has been a fantastic cash flow environment. I have a feeling that it is going to transfer from a cash flow to maybe some directional in the coming days. Traders adjust on that. On the economic front, a lot of economic data is coming into the market the next few days. Today started that off. ADP employment and pending home sales, really big, significant beats. The ADP employment number was a very strong number. And the thing to know about the ADP employment, it is usually undershot the monthly unemployment report more months than it hasn't over the last year. Kind of a signaling maybe we're going to have a strong jobs number on Friday. GDP came in a little bit below expectations, but Matt, in this cycle, in this news thing, these economic reports have already kind of been absorbed by the market, moving on to the next data point in such with so much data going on.
Well, and the reality is, and we talked about this in the Trading Justice podcast, there's just a lot of data this week. And so it's kind of hard to decipher what is that ultimate most important data that the market's focusing on. In this week, to me, and yeah, I get it, I'm an earnings guy, but in this week, when you have companies like Google and Eli Lilly and AMD and Microsoft and Apple and Meta, just to list out a few of the big dogs out there, I'm sorry, that's going to be a little bit more important to the current market. It doesn't mean this data isn't important, but there's context around this data. You're absolutely right, Mark. You're talking about a massive beat on ADP here today. That massive beat is 123,000 in terms of the beat. They also revised last month as well, up as well. And so when you're looking at that ADP, why is that not playing a bigger role in the market here today? Because there is a little bit of context. The expectations were lowered because of the horrific hurricanes we had over the last month. Well, we saw very early in that saga, Mark. It was after the first week where initial claims actually recovered. Remember, it was that first week where you had a big bump up to like 265K in initial claims. But after that, it came right back down to normalcy. And so, are we seeing something just normal here versus the expectations that were a little bit dour? So, I do think context matters on the ADP beat here today. And I certainly do agree with you on Friday that that's kind of now built into the pie a little bit with that expectation at 108 as well. So you can certainly expect beats coming out of the labor market based on what you're seeing here today. But again, it's not really driving the market here as it's primarily an earnings conversation, especially when you have companies like Google, AMD, and Eli Lilly,
All of which you are going to break down right now.
three really important companies, no doubt about that. So let's take a look at these companies from an earnings perspective, and let's talk a little bit about Google in general. First and foremost, Google reported a very good report here today. Google's a tackle 25 stock, real good fundamentals behind Google, and they came out with a fundamental just hammer here today when they came out with beats against EPS. They reported a 212 handle against EPS 185. That's a 12% beat, much better than what we're seeing in the general market. Revenue was also a positive 15% year-over-year growth. Revenue beat the expectation. But when you look at all the different segments, and that's what's important when you're talking about a company like Google, is breaking out their segments because they just don't report one revenue handle. They report multiple revenue handles for YouTube, for Google Cloud, through traffic acquisition, and when at YouTube advertising, for example. One of the key points in these types of companies like Google, AMD, maybe not to a lesser extent AMD, but Google, Microsoft, Apple, the Amazon, is looking at their cloud revenue. Their cloud revenue is a real big growth metric. And when you're looking at cloud revenue, this is where kind of the conversation around Google is centered. Obviously, they got a lot of things going on from an AI perspective, but to me, their AI is really about efficiency, which equates to a lot of these beats that we're talking about here in Google. Google's cloud revenue came in at 11.35 billion. That's 35% year over year growth. And a lot of that growth was driven by AI enabled services. And so when you're looking at Google here today, just a really good beat across the board. They didn't miss on any one of their segments. What if you want to pick advertising revenue, that was a positive. You want to look at traffic acquisition costs, that was a positive. Obviously, cloud revenue was a positive. YouTube ad revenue was slightly above the expectations as well. And so Google just came out with a hat trick, and they rightly deserve the gap up treatment. We'll talk about them from a technical perspective here in just 1 second. When you're looking at AMD here today, very similar to Google. It's a complicated earnings landscape when you're looking at a company like AMD, but let's simplify it. AMD is a growth company. Google's a growth value everything company. AMD is a growth only company. And when you're talking about a growth only company, you oftentimes discount valuation because it's going to grow, baby, grow. But when you look at AMD's valuation, it's extremely high right now. So people are paying a very big premium to capture that growth, which means AMD, you got to grow. And AMD did not have a bad report here today. They had an inline report here today. They came in at 92 cents. That matched the expectation. Revenue was slightly above the expectation. It did reflect a 17% year over year growth. Now, when you're looking at AMD and their segments, client segment grew about 23%. The embedded business was down 25%. Gross margin was positive. It did expand to 54%. But when you're looking at the two major most important segments that equated to an inline report and a reaffirming of forward-looking guidance, you had gaming revenue down 68%, and then you had data center revenue up 122%. Very similar to Google, that data center revenue is driven through AI GPU sales, and that is a very strong growth metric. And so I don't want to say AMD did not have a good report. They did have a good report, but at the end of the day, you will not continue to go up on the day of the release of the report if you're reporting in line on a growth company. I just want to give a little bit of context for AMD. I do not see this report as a negative. I see this report as a simple, not justifying valuation in the immediacy. AMD gap down because of that. Now, on Eli Lilly here today, obviously a little bit of a different company, healthcare giant, massively important healthcare giant they are. When you're looking at Eli Lilly, they came out with a 22% miss. Revenue also missed the expectation, reflecting only a 20% year-over-year growth. And so EPS and revenue were a miss on Eli Lilly. And why are they a miss? Because they're two massively important drugs, Zepbound and Mounjaro. They both missed as well. Zepbound came in about 1.26 billion. Expectation was 1.76 billion. That's a big miss on Zepbound. When you're looking at Mounjaro sales, they came in at 3.11 billion. That did more than double year over year. Very good growth out of that segment, but it was officially below the expectation of 3.77 billion. And as such, they lowered full year guidance, which is the big one here. They lowered it down to 13.02 from 16 mark, 16 EPS down to a 13 EPS is never going to be a good sign when you're looking at the immediate reaction of how the market's going to parse that information coming in. Let's take a look at these things from a technical perspective very quickly. Obviously, Google had a gap out situation, little bit of neutrality. Love that reversal on Google coming in, a nice little head and shoulders coming into the earnings. Now you're obviously confirming that, and it's really about what happens next. What is that secondary pattern? When you gap up like Google did, and you sell off on the intraday like we're seeing on the candle here today, that signifies that you might see a little bit of a gap fill, and that puts you into bullish retracement or flag-based pattern analysis. But at the end of the day, when you do get a breakaway gap like this, you typically see it from a secondary pattern perspective, and you typically look at those ultimate momentum-based patterns, which is, flag-based patterns or high basis to a certain extent. Google, obviously, a catalyst here today in the communication space, as they did officially break out as well. When you're looking at AMD here, AMD a little bit of a gap down, and like I said, not a crazy bad report coming out of AMD. It's just when you have that high valuation and you don't beat and extend that growth conversation, it's going to be a little bit of a negative for your company in the short term. AMD certainly reflects that here today with a gap down. The technical side of the equation is a concern here. You're going to need to see some redevelopment. You're going to need to see a reversal formation. You got way too much chop on top of the chart to really kind of look at it in the immediacy, which means you definitely need to see not only pattern development, you need to see trend development here. And that's a little bit of a different ask. When you're coming to Eli Lilly here, obviously a little bit of a negative report on Eli Lilly, but it did not sell off continue, meaning gap down and continue to sell off. A little bit of a gap down here, but trying to recover. What's interesting here is, in my estimation, Eli Lilly had the worst report of the bunch that we did talk about here today. Google by far was the best report of the three we discussed. And in fact, I would say Google had the best report of the entire market here today. Eli Lilly kind of found that 50-period moving average, but you're certainly going to need to see a little bit more than that. You got a negative report, you got a lot of chop to the top here, and obviously a little bit of overall neutrality market. It would not surprise me if 3 months from now we're talking about Eli Lilly in the same range.
Yeah, and the consolidation patterns following these after big uptrends, very, very, very common. We'll break down more.
We've seen it a lot in growth stocks.
It's just a very common story. We'll break down more earnings reports in the Traders Lounge today. Dollar and yields, have not been the story that they were last week because they haven't moved. Funny how that works out. Taking the week off, which once again, nobody's going to complain about. Trading, Matt, is just easier when these charts are not part of the dialogue. And this week, they haven't been part of the dialogue.
No, they haven't been part of the dialogue, and it's because we're forming a secondary pattern called a high base with a little bit of chop at the top here. And so you really haven't done anything. And when you really haven't done anything, you're not going to be part of that conversation. It doesn't mean it's not a really important chart. I think this is an extremely important chart. I do not believe, and maybe I'm wrong on this, but I do not believe the S&P is going to break out with the dollar breaking out here. And so even though it's not part of the conversation right now, this very second, it's only because it's hesitating in front of a larger move. And that larger move could easily be a breakout. It easily could be a breakdown. Obviously, we're going to have to wait to see that. You tested both sides of the equation here today. You tested that upper channel at 104, and you tested that 9 EMA right around that $4 mark. I'll tell you, if you love the S&P and you want to see it break out, and you love your commodities and you want to see them continue, you're going to want to cheer on a breakdown here.
Yeah, no, and when you go around the rest of the commodities, not a lot of changes in pattern, not a lot to add to the ongoing dialogue. Fire through some charts for us.
No, gold just wanted to drill 2,800 here today. They did it. And so now it's a little bit of a doji here today. When you're looking at silver here, so not a lot of updates on that. When you're looking at silver, a little bit of a choppy price action back to the downside, but trying to hold that 9 EMA very well. Remember, this pattern here is what we would call a front running pattern in front of the larger breakout. And oftentimes you see a flag based pattern as a front running opportunity. But in general, the larger opportunity, or what we would describe as the real trade when it comes to tackle trading, would be the breakout, because there is significant resistance at that line. You can't see it on the 3-year chart because the silver hasn't been up here for a while. You got to go out to that 20-year weekly chart to kind of see what I'm talking about, that massive resistance over here. So it surprise me we're seeing a little bit of volatility at 35. At the end of the day, you're looking at a potential breakout, but do like the flag based pattern, even with that little additional volatility here today. Copper still buys time. That's the conversation here. Copper still buys time. Remember when we were here yesterday talking about this, the 20 period moving average was right around 4.43. That has gotten down to 4.41. We need that at 4.4. That happens tomorrow. This is what I said literally 4 days ago, Mark. We're going to wait on that to come down. We need one more week of consolidation. That's starting to behave a little bit more. Obviously, it's behaving the way you want, but ultimately the final conclusion is a breakout with confirmation of that 4.4 level, which will coincide very closely with that 20 period moving average as well.
Yeah, listen, we are going to, on Wednesday, as we do every Wednesday in the Traders Lounge, go over our midweek setups. It's a great service we provide for our pro members looking for patterns that are potentially triggerable. You can join that fun by going to tackletrading.com, sign up for that 15-day free trial.